Hi, this is Randy Finney with the Right Side of the Chart, and today is Thursday, November 11th, 2013. And in this video, which will be the first of several trade video updates on the long trade ideas today, I plan to cover the coal stocks. I'll try to break these video updates down into really three main groups. There's three groups of stocks overall. There's a few miscellaneous trades, but for the most part, the long trades are lumped into one of three categories right now. I have the coal stocks. There's 8 long trade ideas, which are by far the most heavy weighted sector right now in the long trade ideas. I have 8 out of nearly 24 long trade ideas, so that's about a third, and that's why I'll spend the most time on this video today going over the coal stocks, and then I'll touch on the growth and income trades. Those are the high yielding dividend paying stocks, as well as the precious metals. That includes gold, silver, the miners as well, and then I'll fit in a few of the miscellaneous trades that I have out there as well. So let's start out with the coal stocks here, and we're looking at a weekly chart of the Dow Jones U.S. Coal Index. This is a 10-year chart. So what we're looking at, I want to focus on this horizontal support line here, talk a little bit about the price action in the coal sector and why I'm bullish and have been bullish on that sector. This support line defines several reactions going all the way back to the meltdown in 2008. And if you look here, let's zoom in a little bit on this chart. You can see if you look to the left of the chart, there's several, 3 consecutive weekly candlesticks. We have a couple of tails or wicks of candlesticks where prices broke below. Now that was very common during the meltdown in '08. There was a lot of panic selling and prices really overshot a lot of these key levels. Although this really began that support I'm looking at. We have 3 candlestick bodies here. There's another wick very close to that support line that I have. And then fast forward in 2012, mid 2012, we had another touch of the support line here, another one there, and several in mid early 2013. And what happened from that point is prices broke down. Now this is a textbook breakdown. You have a well-defined, well-watched support level. Once the coal index broke below here, it made new multi-year lows in the stocks. And so what you saw, as expected, is a lot of impulsive selling. Once prices clearly moved below this level and looked to close below it, you had a lot of longs pile out. Overall, being the fact that prices have now moved back up, let me just fast forward a bit. The fact that we had this breakdown, what that tends to do is flush out a lot of the weak-handed longs. You have people that have just been taking pain in the coal sector for years, especially since they peaked out in early 2011. And what that does is you see a lot of capitulation. Longs, the last of the weak-handed longs sell. The last of the latecomer shorts pile in, and then what happened after we had a pretty impulsive, nice sell-off and a nice breakdown where it looked like the coal sector was doomed forever, all of a sudden we had buyers step in. So that shows that maybe the supply-demand dynamics in the sector have changed, and now the sellers are just washed out. Or maybe there's some bullish developments. I haven't followed the fundamentals too closely on this sector, but I did want to point out that price action, the fact that we had the breakdown and it continued for several weeks very impulsively, and then nothing but just mostly green candlesticks, meaning week after week after week of bullish price action coming well above that former support level, which was then resistance. So we took that out. And these lines that I have marked here, the horizontal lines, are where I see resistance. So I think a little bit more, and I think the coal sector is probably due for a pullback. We have a pretty solid resistance zone up here. And then if and when, we're talking well into 2014 if this run continues, but before we get up here, but I just wanted to point those out. One other thing to note here, we had a sort of a bullish falling wedge pattern defined by these orange downtrend lines. We had some strong positive divergence on the PPO. And one final thing to note are these RSI overbought readings. I've circled every level, every reading below the 30 level. So that's the oversold reading, I should say. Oversold readings in the coal sector have, you're looking at a 10-year chart here. We could probably go back longer and see this continue to play out this way. Anytime you've seen the RSI cross below that 30 level was a great time to go long. These typically mark, lasting bottoms in the sector. So we had, a long signal here. You would have had, ultimately, had you held it, gone all the way into those highs in 2011. Next oversold reading we had right here. That might not look like much of a move. It happened very quickly. That's only a handful of candlesticks, so maybe 5-6 weeks, 4, 5, 6 weeks. But if you look at the scaling over here, this is a log scale. So we were down to about 200 at the bottom of that candlestick, and the sector moved to what looks to be over 300. Let's see. Let's put it here. 325. So a move from 200 to 325. That's quite the move, and just shows you that don't think that wasn't a tradable move there when you hit that 70 or sub 30 level. Then we had this oversold reading here. Gave us again a nice move. Don't be fooled by the log scaling here. That's a very sizable rally there. And once again, the most recent oversold reading came right here at the lows, and here we are, moving already from roughly 100 to 43, so 144. So that's about a 44, roughly 50% move off the bottom so far in the coal sector. So there it is, and because of the posture of this chart, the positive divergence on the weekly chart, the fact that prices have regained that key support level after a breakdown, leads me to stay, longer term bullish on the coal sector at this point in time. So let's go ahead and jump into the individual trades. Starting out here is ANR, first of the coal stocks. I'll go through these in alphabetical order. ANR, Alpha Natural Resources. Here's a weekly chart we're looking at. Just to kind of give a quick summary, we had this long-term support line, which was similar to that weekly support line I just covered in the coal sector. We had these reactions here, several tags here, tag back in early 2012, then an impulsive breakdown. Prices went on to, quite a bit lower. Now, what we're looking at here on a weekly chart is this bullish falling wedge pattern. You have the PPO down here, which again is very similar to the MACD. Strong divergences in place on the PPO, strong divergences in place on the RSI on this weekly bullish falling wedge pattern. Breakout, an initial pullback, which is somewhat common, and then very sharp impulsive move so far after that initial knee-jerk reaction following the breakout. So ANR from this chart, I don't see any solid resistance till up here around the $10 level at this horizontal line. And then if you look over here on the left, the volume and price histogram, these green and red bars, we have a thin zone here where there's very, very few trades took place. And that's because this breakdown here, prices fell very sharply. That was a multi-year support shelf. And once prices broke below it, they fell sharply. So these thin zones work a lot like a gap does when you're trading stocks. Gaps, once entered, tend to get filled very quickly because very few trades took place in between there. So my expectation for ANR, if and when prices continue to move higher, we'll find some resistance up here around the $10 area and probably look at a multi-week, maybe even a multi-month consolidation under that level. I will definitely be exiting all my position if and when we get there and look to revisit the stock, and I'm sure this would be sometime later in 2014 if we see a healthy consolidation under this level and then a solid breakout up and above into this thin zone. And if that were the case, then my expectation would be that thin zone would get filled rather quickly. Again, you're looking at a weekly chart. Rather quickly could be, weeks, couple months, but either way, a move from $10 to roughly $14, that's a 40% move. Very, at this point in time, bullish looking longer term. This is one I've kept on as both a regular long trade as well as a long-term trade, which are for longer term traders or investors. And just move forward on this one. Here's the daily chart. we have this long-term trend line. Let's just zoom out to a 2-day chart here. Here's a trend line starting way back in early 2011, and what happened in late 2012, prices broke out above the downtrend line, which was bullish, but we had this long and slow and low level back test, and prices came back took all the way until, what is that, July? Yeah, it looks like July here, or late June, early July, where we came in and back tested that long-term downtrend line. So ANR was added as a long. Once I noticed that price action, it was a long on a breakout of this downtrend line here. So what we had is positive divergences in place on both the MACD and RSI. As you can see, prices making lower lows against the indicators making higher lows. We had a nice breakout and back test. T1 was quickly hit for a gain. T1 was 660, and we were hit just a few days later. And this is really a textbook example of both technical analysis and how I trade and how I use these multiple target levels. Hitting that first target level would have allowed a quick, more nimble trader to book full profits. Sometimes you can even take a quick short, reverse it off those levels. But in this case, it was a long-term trade idea as well. So at the very least, could have took partial profits and sidestep this consolidation, which is usually the case when we see these target levels get hit, prices pull back and or consolidate. And if you look at it, we've had a couple of attempts to clear that resistance level after the first target was hit, but these are just candlestick wicks, and that means prices closed the day back below that level. So we were never able to mount a breakout above that level until just recently here. Okay, so prices did break out finally in here, late October. And if you look at the price action from this point, we had this strong move up to that former first target level, which is now, of course, and was then and continued to be resistance up until that point. And we came above it, and look at this nice pullback here. If you really zoom that in and put that up on a 60-minute chart, I would have a downtrend line drawn on the top and bottom, and that would be a perfect bear flag pattern. Bull flag. Bull flag patterns are continuation patterns in an uptrend. When you see this strong advance, that is the pole of the flag, or a flagpole. You have the flag here, and then prices broke out, and this happened to coincide with the first target level being taken out. So this isn't coincidence in my book. You'll often see this, a nice breakout in a consolidation or continuation pattern right at the, at the breakout level. So there's your flagpole. You just basically add the length of the flagpole onto where the flag breaks out, or at the bottom there, and we rocketed right up to the second target level, hit the second target for a 34% gain on the trade from entry, and now once again it looks like we're bull flagging again because prices have moved back in here, so this looks like a possible continuation pattern. So if and when we get a solid break, and to be safe, I would say wait for a move over these recent highs about 825, and if and when that happens, we might see a nice thrust all the way up to this third and final target, 980. Again, I talked about the weekly target, the weekly resistance being around the $10 range, but zooming in on this daily chart in trying to place these suggested sell orders or profit target orders where I think a fill is most likely. I don't want to try to squeeze out every last penny. So this third target is here at 980. Of course, the stock may go a little bit higher. And at that point, if and when we get there in the next few weeks, I will take ANR off as a trade idea and look to revisit, sometime next year if we've seen that consolidation that I'm looking for added back on as a new breakout above the wherever. We'll look at the charts at the time. Might be 10, might be a little over 10. We'll see where the stock stops. Okay, moving forward, I've probably spent too much time, I should say, on those first couple trade ideas, or at least the index and the ANR trade. So I'll move a little quicker here. This is BTU. This chart has a live link to it, so if you use the post by ticker symbol drop-down box on the site, select BTU. You can reference the previous post on this, and there's a live link that'll take you there, and you can look at the same chart that I'm looking at. This one is up, if I'm not mistaken, about 15% or so since the breakout. We had as the notes say here, we trigger along either on a breakout above this downtrend line, the white downtrend line, and or a break above this R1 level for those of you that want to play it safe, because there was resistance here at this horizontal line. And the stock has, of course, taken both of those out, no problem. And we're quickly approaching that first target. Now, I will, at some point today, try to update this chart to list a specific suggested profit-taking level. But ideally, you want to sell just a little below these horizontal lines, because these mark the support lines, or the levels where not support, resistance, or levels where I expect a reaction in the stock. So longer term, this trade looks fine. If you're a longer term trader investor, you might not be overly concerned with any reaction around that T1 level, but what you would want to do at this point to protect profits is ratchet up your stops, and at the very least have a stop set not far below this R1 level, which is now S1. In other words, that's former resistance is now support. So I can change that to S1, as any pullback should be contained by this horizontal line. But again, where you set stops depends completely on your own trading style, your trading plan, which is your preferred price target or targets if you're planning on scaling out. So that's BTU. CLD, Cloud Peak Energy. This one also has a live link. So again, if you reference the symbol, just click on any of the tags. If you look at the select post by ticker symbol, or go into the long trade ideas and click on the symbol CLD, and it'll bring you to the previous charts and notes, and there'll be a live chart. But what I've added to the CLD trade, and I actually put this line here, there's this horizontal line around the 1650-ish level, maybe just a hair below, which is a resistance level. And I was considering, and still am, adding this as an earlier target. This was the initial target zone here, these dual parallel horizontal lines. But I noticed some resistance here after I put the trade out. And the stock has, in fact, found resistance along that level for about the last week. Again, I made that update on the live chart, but I didn't make a post on the site. So prices are still there right now. We're just below there. For those of you that want to take, some of the quick profits, we entered along here on the breakout of this channel. So that's cloud. Still looks good longer term. There's the target zone here, and by the time the stock gets there, I have this downtrend line drawn here off these highs. This downtrend line is probably going to come in around where that target zone does. And let's assume that it takes a few weeks for prices to get up here. So that would be a pretty solid level, and at that point, that will most likely be my final target where I'll close the trade. Okay, this is symbol CLF. Cliffs Natural Resources. This one has just been a monster on the long side this year. We traded Cliff earlier this year. It was a long entry on a breakout of this bullish falling wedge pattern. And you can reference the notes on that trade. This one hit what I had as an official target, this T2 level at 23.47. We hit that for a 49.7% gain, at which point I said, those holding out, for additional gains. I mentioned the likelihood of this downtrend line. I had drawn this long-term downtrend line, that being hit is an unofficial final target. And we went up, and as you can see here, if we zoom in a little bit, just nearly to the penny. It just went a hair above that, and that was for I think a 65% gain. So that was a previous trade, and then once again, this downtrend line, of course, becomes and was resistance at that time. We had several reactions, from that point I mentioned it here. We had another attempt, and so I most recently added as a break above that downtrend line, and most recently T2. We hit T1, prices quickly went through there, hit T2, the second target. That was for a 18.9% gain. And so now where we're at, it still looks good. This is the final target, T3, which is 30.80, comes in around the the 61.8 Fibonacci retracement from this move right here. This is where I marked my fibs from this high, reaction high, down to these lows. So I actually had that target ahead of time before I even put the fibs on there, because this is a nice, very large gap here, and this gap should provide significant resistance if and when we get there. So for those of you still in the trade, or anybody looking for an additional long side, now I'd be very careful chasing these coal stocks, especially those that have moved up so much and are so close to the final target. But we have this reaction back here when we hit the trend line back in August, and that's also lines up with this first target I had. So prices have pulled back after hitting T2. This would be a logical support area, this line here, and that is around, let's say, 26. It's hard to get it on this chart. A little under 26.20. So you'd want your stop somewhat below that, give a little margin of error, not much below the 25.90 area at this point if you want to protect profits, or for somebody who might want to go long on a pullback to that area with a stop just below. And I think this is just healthy price action. We're pulling back, could be construed as somewhat of a bull flag pattern. And what we'd like to see is prices punch up through the T2 level and take out these previous highs right here. And then hopefully we see this 30.80 final target get hit in the next few weeks to months here on Cliff. Okay, this is coal, symbol KOL, which is the coal ETF. This is Market Vectors coal ETF. As I mentioned on the site, my preference is almost always to pick the most bullish looking stocks within a sector versus trading the sector. But I am completely aware that some of you out there prefer the relative safety and diversification ETFs, whether you have a smaller portfolio size and you're not able to own 6 or 8 names in a sector. You don't, with an ETF, you're not as exposed to as much risk on a sudden gap up or a gap down against your position. So with that being said, here's coal. Looking still bullish at this point. It is profitable. We added this one on as a long down here around 2004, I think was the entry price. And I mentioned that one could enter at that time, and my preference would be to wait to see until prices take out this R1 first resistance level. So far, we continue to have the stock or the ETF continues to find resistance there. So any solid move, intraday move or a daily close above the R1 level will most likely open the door for the first target to be hit, and eventually maybe some of these additional targets. But as of now, trade is somewhat profitable, but we're still looking at this resistance level just overhead. So again, my preference, if you don't have any positions in the coal stocks and you're looking to go into the coal ETF, being that we're so close, you might want to wait for a breakout above the R1 level before adding or opening a new position in this ETF. NRP, Natural Resource Partners. Now, speaking of ones that are offering an objective add-on, here's another, nice example of technical analysis. This one was added back as it was a long setup on it to be with an entry to be triggered on a breakout above this bullish falling wedge pattern, or in other words, above this downtrend line. Prices did break out, quickly went up, hit T1, and have now pulled back to make a nice back test of that pattern. So this is about as objective as it gets from a trading point of view. If you are bullish on the sector, one could go long here. Current price is around $19.97, so around $20 a share, and set your stop based on your preferred target. T1 would be the next target again. In fact, I would move this line up. I would add a line a little bit higher. See, we have this gap around right here, and I would say that next time we're going to run into resistance will be closer to the top of this recent reaction high, because we just exceeded my first target level on that last move up. So again, you could enter a stop here with a target around this first target level, really around the top of the recent highs, with the next target up around here, the T2 around the $24 area. Okay, this is RNO, Rhino Resources Partners, and This one is, I believe, the only coal trade underwater right now. We're only down by about 3% or so. The entry was made on a breakout above this long-term downtrend line. We back tested for a couple days, but then prices fell back below and inside the wedge. So I wouldn't be adding on. There are times that I will scale down on a position or add to a position, but not a position that has gone against the technicals. So being the fact that we're back inside the wedge, I still think the stock has promise longer term, but you still want to see prices break back above this trend line. The downtrend line. And as far as stops go, as much as you might love a trade, I do like this one. I put it on also as a growth and income trade idea because it has a very nice dividend yield. However, you need to, set your stops, and those should be set commensurate with the target that you're going for. So if your preferred target is T3, calculate, take the total point move from your entry price or your average cost. And that is why I give suggested stop levels on this site. Every trader is different. Even my own style, sometimes I scale into a trade, buy at different buy points. So everybody's average cost will be different, and everybody's preferred target will be different. Longer term traders want to go for the higher targets, or maybe their own targets. Maybe they like the chart pattern, but they see something above or a different level I do. But the bottom line is I like to use at least a 3-to-1 risk to return ratio. And if you do that, just calculate the total point move to your target from your average cost. And that'll give you, take that number divided by 3 and then subtract that from your average cost. And that's going to give you a, 1 point downside to a 3 point gain or better. Some of you might prefer to use a 4 or 5-to-1 RR. Okay, and wrapping up the coal stocks, this is the final one. This is symbol WLT, Walter Energy Incorporated. This has been a monster. We went long Walt here around, and that's based on the weekly chart as well. The weekly chart helps us identify longer term support. And we could see that the stock was trying to pound out support here, on this long-term support line. And if memory serves me correct, I think we honed down the entry on this 4-hour chart. Yeah, we did. And we're up now. As of today, the stock is up over 70% from entry. So this has just been a great trade. We hit the first target here of 16.15. Let's see, that was for a 46% gain. And as I said, we're up about 70%. So, as always, feel free to take profits wherever you feel comfortable. We are coming up. I'll point out the 200-day moving average, which, has capped some advances in the past. That may come into play as resistance here. So don't ever hesitate to take profits on a stock. However, it still looks good up to this second target level, which I have set at 2015. And once we get there, my expectation would be some consolidation or a pullback. And then we have this thin zone here on the volume at price histogram, where if and when prices get above there, as much as Walt has come off the bottom already, I think over time this third and final target still has a very good chance of getting hit. And I might even extend. I see some very nice resistance here. And again, if you look at a long-term, a weekly chart, where the stock has come from, what these oversold readings in the past, what kind of moves they have led to, it's, very possible we go, well over 100% plus return on this stock. So, my targets are dynamic as the markets change, the stock charts, the patterns on these stocks change. I may sometimes pull final targets early or sometimes add additional targets. So as of now, Walt looks good. Just keep your stops in place and, expect some reaction here, possibly around the 2015-ish area. And then if we get past there, I'll move up to the 2760 area. Over time, looks possible. Okay, this has been Randy Finney with Right Side of the Chart. Hope you enjoyed.